Meet Rod, more bang for the buck. Wall Street suits, your time is up. Meet Rowdy, more bang for the buck. Meet Rod, more bang for the buck. Wall Street suits, your time is up. Stack that premium, protect my six. Upside open, but I hedge that risk. Garage born plan, average Joe taking a stand. Roddy's the method, RD is the man, RD is the man. Yeah, didn't wait on permission. I picked up the weight, phone in my hand, early hours, learning to take. Garage taught patience, no room for excuses. Every choice mattered cause the outcome it uses. I stopped handing the wheel, the voices I trusted, took responsibility. That's when it functioned. If it worked, that was earned. If it failed, that was mine. Family in my vision, so I stayed on the grind. This wasn't about hustle or flexing the grind. It was structure and rules I could run every time. RODY came from method with discipline attached. Built for the people who carry the weight. So meet Roddy, more bang for the buck. Wall Street suits, your time is up. Stack that premium, protect my six. Upside open, but I hedge that risk. Garage born plan, average Joe taking a stand. All D is the method, all D is the man, all D is the man. I don't chase green candles, I monetize waiting. Data working daily while they guessing and praying. Premium stacking, structure over sensation. Volatility paying rent with no conversation. Wrist boxed and tight before the play even starts. Calm under pressure, John Wick with the plan. They argue direction, I structure the trade. Let volatility work while emotion gets played. Fast money flashy, but it fades when it's pressed. I want repeatable wins with my downside dress. Not a lottery ticket, this a blueprint I trust. Level the field, get more bang for the buck. Meet Roddy, more bang for the buck. Wall Street suits, if your time is up. Stack that premium, protect my six. Upside open, but I hedge that risk. Eyes born playing, average Joe taking a stand. RD's the method, RD's the man, RD's the man, is the man. Family to your head. I don't need hype, I don't need a crowd. Just rules I respect when the pressure gets loud. This ain't for everyone, that's part of the design. RODY rewards the ones who take responsibility every time. RODY, RODY the method. RODY, the people, the people, RODY, RODY. If you want it, carry the weight. Meet Roddy, more bang.
Yeah. Oh, yeah. Early mornings before the sunlight, house still sleeping. Screens already lit, one desk, one plan. Every click gotta mean something. Born in the garage, one outlet, one extension. Pressure taught discipline, not talking, just intention. No suit fed my confidence, no hand-me-down plays. Bills on the counter taught me risk has a face. They said trust the system, I trusted the work. Every loss paid tuition, every win left a scar. I heard a cricket in the quiet, steady chirp in the dark. Like patience beats panic when you're playing it smart. If I eat, that's on me. If I fall, same name. From the people for the people, no shame in the gang. This ain't Wall Street,
This Roddy, hey.
Bang for the buck, move slow, move low. Stack that premium, protect my six. Upside open, but I hedge that risk. This ain't luck, I'm ready. Garage born mine with the market steady. I don't chase green candles, I monetize waiting. Data working daily while they guessing and praying. Risk defined entry, exit already mapped. Know what I lose before the order gets tapped. Premium stacking, structure over sensation. Volatility paying rent with no conversation. I don't need direction, I trade behavior. Let emotion burn out, let the numbers stay paper. Fast money flashy, but it fades when it's pressed. I want repeatable wins with my downside dress. Not a lottery ticket, this a blueprint I trust. Level the field, get more bang for the buck. This ain't Wall Street, this Roddy. Bang for the buck, move slow, move low key. Stack that premium, protect my six. Upside open, but I hedge that risk. This ain't luck, I'm ready. Garage born mine with the market steady. Ride garage. Cricket, patience building the minutes. Risk known, I don't trade what I don't own. Not for everyone, let's keep it exact. Pressure make diamonds, not internet caps. No handouts, no hero, no suit to impress. Just structure, discipline, time doing reps. RODY the method, remember the name. From the people, for the people, but not everyone plays. Born in a garage, born in a garage, yeah, born in the garage, inspired by cricket. Built for the people, but not everyone gets it. Born in a garage. Yeah.
Good morning, everyone. Today is Saturday. Whew, finally. Saturday, March 7th. And today is the RODY update, which basically means we go through our options trades for the week, see how we did, see what happened, see if we made money or got our asses kicked. But either way, we're going to have fun doing it. If you caught the two songs in the beginning, the first one was called Bang for the Buck. The second one was called RODY for the People. I'm trying to get an idea of what people enjoy or what will be representative of the RODY song or the Retire on Options theme song, right? Or if both suck, either way, please leave feedback in the comments, either now or after the video, whenever. But all right, so this video that's playing, obviously this is an old video 5 years ago. I did a whiteboard of options trading for beginners, and if you're interested in learning the basics, I don't even remember how good it was, but hey, maybe it's all right. It does have 6,000 views, so that helps. But either way, if you're interested in this type of video, this is all I got for now until I make a new one, which will happen soon. All right, so let me just pause that and let's get to Bitcoin. All right, anyway, how's Bitcoin doing? It's yeah, not good. It's going down. Shocker, right? God forbid we have, we go up and we stay up. You could see how kind of this week went. Yeah, I mean, a week ago, sure, 63,000. So we're up from there. But man, like, what the heck? We're coming back down. Obviously, this whole, the war thing is doing some damage. We had a couple trick outs earlier in the week. Market was green, but hey, whatever. We got to make do. We got to make it, make the best of it. All right, so let's get into the options trades here. All right. First, I'm going to talk about my wheel strategy, because if I don't talk about it first, then I'll forget about it. All right. So anyway, right now I'm not really heavy on the wheel, but I am wheeling TSLL, on its own. And, so far it's doing all right. In the beginning, I went aggressive. That's when TSLL was at like 18 bucks or so. So I was selling puts at that price, and I got assigned at 18. So I do own 100 shares. For context, I own 100 shares at $18. But TSLL, as you can see, it is at 14.21. So this 100 shares, it's kind of just collecting dust, because I'm not going to sell calls, below my cost basis. And I can't really sell it at 18 and get a respectable amount. It's not, that's at least worth it. So in the meantime, what am I doing? I'm just selling more puts in order to lower my cost basis. I'm not too aggressive, because again, the market is a little unpredictable at the moment. So it could drop. Understanding TSLL could go into the single digits, rather quick. But for this week, I had a 13 and a 14. Again, I welcomed assignment, but TSLL did close at 14.21. So yeah, unfortunately, I did not get assigned, so I could not lower my cost basis. But at the same time, it's fine, because they expired worthless, which means, guess what? I get my collateral back, my 1,300 and my 1,400 that was in pending status. When you sell a put, obviously you need collateral. You put it up. whether it's margin, whether it's cash, it's on hold. So I had 2,700 on hold. Now that's released back into the account because this essentially expired worthless. Now for this past week, I sold, actually, let me gray this out. I like to do this as we go because I forget, and it's impossible to update these damn spreadsheets anymore because I'm getting old, man. I'm old ass YouTuber. All right. Anyway, we got 3 puts for this week. I did one, not every day, but I did one on each of the down days. Essentially, I did a 12, I did a 13, and I did a 14. So I sold 3 puts at the various strike prices, and I collected essentially in total. Where is it? I don't like the sorting I did on this spreadsheet, but I collected $97, $97, and again, collateral used 3,900, and you could see, the annualized amounts essentially are, really, really good. So it is worth it to me to continue to do this wheel. Again, doing the wheel, doing the RODY, doing all these other strategies, it kind of gets a little, it's a bit much, to be honest, when you're working full time, when you got kids, when you're coaching, when you're this and that, then you know what I mean? So I'm trying to keep it to a minimum. So I'm not going to like do anything stupid or, something that'll screw me up. So either way, what I do in order to calculate my wheel now is I calculate how much I made, obviously $97, but instead of using the collateral that I fronted for those 3, I actually just used the collateral that I had for the whole week that was pending during the week to do, essentially a true, on this wheel alone. This is the money that was not available to me, essentially. It's the money I was risking at the time. So even though some of this 97 was not because of that amount, I'm going to use it in order to calculate my ROI. So the return for the week was 1.47%, and the true annualized is 76%, which is still good. But again, what's the goal here? What is the goal of this wheel strategy on TSLL? The goal is income, and that's it. If I get capital appreciation, great. But again, you could see the assignment. We got assigned 100 shares. If I get assigned another contract, that's another 100, and so on and so forth. But again, since I had 100 shares at $18 and the TSLL is priced at $14.21, it's not ideal. It's not good. It's not a good price for calls. So I'm not going to sell covered calls until I start getting assigned some more shares and lower my cost basis, or until TSLL does go up, say into the $17 range, and then I could sell calls at 18 or above, if that makes sense. All right, but we're just playing around. Nothing fancy here. I am tracking weekly income. Again, the wheel is not really the money maker here. It's just some extra play, to be honest. So I'm not even adding it into the whole conversation of the overall income. All right, let's get to the RODY. All right, so let's zoom in. Let me go to some comments here. I'm assuming the audio works. I know I started a little early because I don't know. I've been up since 3:30, so I was gonna start at 6 actually, but I figured I'd be nice and not do that. But let's see. Wolf says, I would write a call at 18 even if I only made $2. Yes, it isn't much, but it is income. Yeah, I mean, you can go out further dated, sell a call at $18. You can still collect money, and I get what you're saying. And I always did that in the past as well, just to collect something. But the problem is on these leverage funds, it could be a missed out opportunity. If TSLL does jump, if Tesla jumps. So I'm gonna wait it out because I've been there, done that, believe me. And sure enough, I'm getting assigned at $18 for a 10-cent premium I collected, right? So sometimes it's worth it, sometimes it's not. But right now, to me, it's not worth it. All right. So anyway, let's get into the nitty gritty. I'm not going to go through all these tabs. I'm going to kind of skim through. I did update the QQQ chart. Let me zoom out a little. Again, we're not chart people here, but we pretend to be the chart people. The dog's already barking. Jeez. All right, let me let her out. Okay, here we go. All right, so and I track again. We're only looking at QQQ because they're expensive and they're one of my biggest positions and one of my favorite positions. So I would like to understand like how it works, right? So on the left is the 6 month, on the right is the 1 year. So again, we're looking in red. I do have it labeled up here. The 200-day moving average. So basically it shows the broader market direction. Over the 6 month, it's still, upwards overall. Over the 1 year, it's still upwards. So I guess, that's a good thing. The 100-day is blue. You can see it's been upwards on the 6 month, and now it's kind of plateauing, staying in this range here. It's not, in the upward trend that it has been. Same thing looking at the 1 year. It looks like it's flattening out. But again, we're in, there's chaos in the news right now. So this is not the norm. Like, this is not normal stuff to deal with. So, I mean, to me, like, this chart, does it mean anything? I guess, but it's like, what the hell? Every day it's something, tweeting this, tweeting that. But I don't know, man. But obviously, this was not a good week for the Qs. If we go to stock analysis, I'll just pull it up and see, like, over the 5 days. We'll do the 5-day chart. It was down 1.24%. For the month, it's overall flat, which is good. For the day, though, it went down 1.5%. I mean, this was yesterday. Yesterday, being Friday, my rolling day, of course, it was down, which is not ideal. The 3 month were down 4.11%, but the 6 month were up that amount. So again, this thing is all over the place, and it's it's pretty volatile. But for the most part, 600 it's been kind of the low that it's hit. If you look, let's look at the 6 month, right? You see, like, here's the 600. People say, support resistance. Is this support line? I didn't make support lines. I feel like every time I add a line, I forget to remove it. But what's the bounce back, right? Where does it bounce off of? Does it bounce off the 600? It looks like it, right? Because every time it goes down, it goes up. So are we comfortable at 600, right? Should you start a position at 600 and feel pretty good about it? Probably. My cost basis is 615. So obviously I'd wish I was at 600, but hey, it is what it is, and we'll make do. All right. Anyway, that's my charting fun. Something additional I've been thinking about is taxes. I want to be smarter this year about, taxes, income, and so on and so forth. So I'm going to make some changes throughout the year, as we go through my options and, the trades that I do. One thing is, again, you guys, I'm a freaking broken record with this. I'm staying away from the individual tickers. So as we go along, as we exit the individual tickers, I probably am not going to add back. In fact, SOFI is probably the only one that I'm doing for the long term, just because I don't know, it's cheap. I feel like long term, it's it's a good company. And that's the only one. I mean, I'm not messing with the others. I know ELF is doing good too, but as soon as this ELF trade's done, I got to get out of it, right? And I got to stick to the indexes, all right? But we'll talk about that. Now, the other thing is, as I'm doing options, I'm selling options, whether it be SOFI, ELF, IWM, SPY, or Qs, I'm paying, the normal tax rate, the ordinary income, like your regular tax rate. There's no benefit, right? I'm not making, I'm basically paying like income tax, like my normal freaking income tax on any options premium that I make. However, there are something called 1256 contracts where, you typically hear about the ETFs. They say it because, they trade tickers like the SPX. This is the SPX, by the way. It says .INX, but that's how Google Sheets works. So, they trade those tickers and they are able to, the realized gains, at least they're paying that out to you, and it's a 60-40 benefit, right? 60% is taxed as capital gains, 40% is taxed, as the regular income or what ordinary income, whatever the hell you want to call it. But the bullshit tax rate, let's call it that. But it's still 40% is better than 100%. So it's something I've been thinking about considering. However, there's a problem. I can't afford the SPX. I mean, look at this, 6,740, the Russell 2,525, the NASDAQ 24,000. These are the indexes that qualify. These are the, this is what qualifies for 1256. Obviously, I can't afford them. So I'm not trading them. I did decide earlier in the week, I'm not sure if you guys saw my post, but since I'm currently not in the S&P 500 through the RODY fund, I'm doing it through an ETF. I decided to do some research, and long story short, based on my particular situation, T-SPY made the cut for many reasons. I'm not going to get into that now, but and they have obviously 1256 contracts. Silver and gold, obviously, they're a little more affordable, so I could probably run the RODY on them, right? But again, they're just so, I don't know. I'm a little scared to get involved with that. XND, that's shown to be, again, there's the micro indexes, but their options chain is not as liquid as some of these others. And then there's the VIX. I do trade the VIX, so that's 1256 that I actually can afford. And the VIX has been treating me well. In fact, the VIX has been jumping up again because of the freaking news lately. So anyway, it's just something I'm thinking about tax-wise in the long term because, not that I should be worried about taxes with the amount of losses I already took this year, but you get what I'm saying. All right, let's get right to open. What the heck is open doing? Open is freaking brutal. It's down like everything else for the most part. Where's the price? Where did it close at? It closed at $5. Yeah, that's wonderful, isn't it? $5 freaking. So what does that mean? It means shit. That's what it means. It means I sold one call this week. I went out like 44 days. I sold a $7 covered call because that's my cost basis. And I collected a whopping $13. Wow, I know. Whoopie-doo. So if I go down here, by the way, I have a total of 10 contracts. So far, I have 9 contracts that I sold on. None expired this week. None expire next week. But I do have one expiring the following week. So I'm trying to make weekly income based on the situation. So I do have one more contract. So at least for next week, yes, I can, make more income by selling a call, which I'll probably go out to either 417 or hopefully they start to add more weeks that I could sell more calls on. But right now it's a little stingy at that range. So how do I feel about my open position? Well, let's go to the holdings. Overall, this thing expires November 20th of this year. So we got plenty of time, man, right? We got 8 months or so for this thing to recover at least to $7, which I thought, by now would do better. But again, we haven't gotten freaking interest rate cuts. We haven't gotten anything. We got nothing but bad news, it seems. So of course, yeah, it's in the shitter. Right now, in fact, if I close my open position, it would cost me money. It would cost me $415. Worst case scenario, it's going to cost me another $2,000 out of pocket. But that's if it goes to 0 or so. But yeah, so open so far, it's not doing too well, as expected, though. That's not news. SOFI, my first SOFI position. what are we doing? I mean, nothing. We're doing nothing because our cost basis is $28. We have 4 contracts pending, and we have 1 more contract we can sell calls on. I looked it up. Again, I'm going to have to sell under my cost basis. There's no way around it, or I'm going to have to close out of this position. This expired worthless. This was a $28 strike. So now this opens up 1 more contract. So now I have 2 contracts left that I could sell on. But again, you know, we do have the synthetic expires on May 15th. So we do have, you know, some time left, not a lot. So do I think SOFI is going to jump $10 during that time? I don't know. I mean, it could if we get some freaking good news, but I don't know, man. It's been a little tough on SOFI, even, especially this position. So again, if I closed it, I'd have to pay $1,600. So something to think about, or I could just wait it out. I have 69 days left till expiration on that. Now, the other SOFI position, this one I handled differently. This one I handled better. This is, you know, after some experience doing the RODY, essentially. And I did 1 contract at a time. I did a 25. Okay, it dropped. I did a 23. Okay, it dropped. I did a 20. Okay, it dropped. I did an 18. Okay, it didn't drop again, but it is at 18 still. So again, the plan is, all right, market does what it does. Guess what? I'm going to add on every $2 drop. I'm adding because I'm a believer. I'm in it. I'm in it to win it here. The expiration date on this is June 16th, not next year, the year after. So you know what? Time, I don't give a damn. I got all the time in the world. So that is why I am willing to lower my cost basis as long as this lasts. But again, this is the only ticker I'm going to do that on right now. If I decide to get out of SOFI, maybe I'll jump in another ticker, but I'm not doing multiple. I'm focusing on 1 at a time because I just can't. Yeah, I can't do it. I can't do any more. No, thank you. So SOFI it is. SOFI is the ticker. The rest indexes. All right. Anyway, I should probably read some comments. I've been yip-yapping. What do we got here? That is why I stayed in ASST for so long. I was writing contracts, making after fees. Yeah, I'm long on ASST now, Wolf. I don't know if you saw that, but so that being said, I would trade options on it, but I'm not going to. I already said I'm done trading options on crypto related stocks. It's not for me anymore. Good morning, Bruce. Good morning, Jake. What's going on? Double D in the house. In the house. All right. Yeah, I agree. Too volatile for the RODY. And you wouldn't think that. It's been kind of stable. Well, years prior. I used to always trade options on the VIX and never had a losing trade. Rod, the VIX is a smart trade. Yeah. Honestly, I regret not buying more leaps on the VIX. So again, lesson learned. But again, the 1 contract that I have, yeah, it's freaking amazing. It's doing awesome. It can't get a sign. It's 1256. It's flex your. It's, you know, again, I'm loving it. You know, the VIX is probably my best trade outside of the indexes. They have weeklies, but their weeklies expire on the Wednesday morning, which means I have to roll on the Tuesdays. I actually set a freaking calendar reminder because I keep forgetting. But morning, Nikki. What's going on? All right, so let's keep this train moving here. So anyway, obviously I had 4 contracts, right? If it goes down to 16, if SOFI goes to 16, whatever, I'll add a new contract. I will. I don't give a damn. I'm going down. I mean, there is a limit to how far, obviously, we're going to drop here. And then I would expect a decent recovery. But for now, yes, I will lower my cost basis as needed. I'm not going to add another 18. I will add a 16. But if it stays at 18, or if it goes up to 20 or goes up to whatever, then this is it. This is my 4 contracts, and we will make do. But if it ever drops under, the $18 range, like I said, 17, 16 range, yes, I'll add more because, again, I'm going to lower my cost basis. But for now, if we check the holdings tab, the cost basis is $21.50. Again, the price is at $18.90, $21.50. I can make do. So this week, did I sell a call? Yes, I did. I sold a call at $22. But I did have to go out. Like I couldn't do a 1 week because again, if you're kind of that far away from, you know, the current price, you got to go out a little bit. And I wasn't doing this in the beginning on the RODY. I didn't want to, but you got to do what you got to do. So that's what I did. I sold a contract 17 days out. And what did it pay me? 19 bucks. Okay, we'll take it. We'll take it. And we'll see how it goes. I did have a contract expiring yesterday, a $23 strike. Obviously, SOFI is not at 23. It's at 18.90. So that sucker expired worthless. We can shade this out. And then we can hide it. And guess what? That means we have one more contract to play around with for next week because we have a total of 4 contracts. All right. Makes sense. I'm not going to zoom out for this, but, you know, long story short, the synthetic position, yes, it's worth money, but it's not worth more than what I paid. But I'm not closing this anytime soon. Again, this sucker expires a long time away. In fact, it's 832 days away until expiration. So we can have a lot of fun during that time. My goal now is to only do contracts on actually the furthest expiration again, because if I'm gonna get into a fund like this, I better believe in it for the long term. All right. Anyway, let's move on to ELF. So ELF, I think we all know the story of ELF, but to be honest, like you can't make this crap up. Like you literally, I have to show you guys. Like I'm just so over it all. Like, all right. So what did I do last week? Do you remember? Remember I had an $84 strike and I was stuck. I was stuck there, right? Because it kept, you know, ELF was up high and I couldn't roll it. And what did I do? Oh my God. I rolled up my synthetic. I rolled up my covered call. I paid $11.25 per share. You believe that? You freaking believe that? If I waited one more week, look what it's at. It's at 82. It freaking like I said, you just can't make it up. Because I wasn't gonna do it. I should have just waited one more week, and I wouldn't have. You know, I'd been fine. But you know what? Whatever. This is why I don't want to mess around with individuals anymore. I just don't have time for this crap. Like this is such BS. Who the hell knows crap? Because ELF moves like insanity. Anyway, on top of that, let me just bitch about something else. My $94 call. Meanwhile, ELF was at what, $82 yesterday. My $94 call. Every time I tried to roll it, every time I tried to check, it was over $1 to close. $1 when it should be a penny because it's essentially worthless. This was at like 3:30 p.m. by the way. So I had to do a separate buy to close, which is why you see the buy to close here. And then I sold a separate call. You know, I had to move it down. I had to move it down to 90, which is, you know, it's far out of the money because I don't trust ELF. I mean, my cost basis now, I rolled it. It was from 75. I rolled it up to 85. And yeah, it's below that too. Like it dropped below the freaking new synthetic range. But whatever, man, I sold a 90 and I collected $70 for that. Which, again, ELF's pissing me off now. ELF was doing so good. And then, of course, yeah, let me make the move. Let me roll up my synthetic and then get my ass kicked the next week. It's like, you know. Anyway, I'm done bitching on ELF. All right. Anyway, what did I make? $70. I'm fronting what? I'm risking 2,751. That's 132% yield. So that's pretty good. The holdings, what are they worth? Not much. If I sold out of ELF right now, the synthetic would be worth 152. All right, let's move to the indexes, which, to be honest, these haven't been doing that well either. But let me catch up on the comments. Yeah, ASST. So yeah, you probably have a lot of shares, I'm guessing. Good morning. Play the pipers here with his wrestling phrases. Everybody's got a prize. For the $1 million man. Anyway, pay the piper. We're probably alone in our wrestling obsession, though. But yeah, we'll always quote it, of course, in every video because that's what, this is half wrestling channel. All right. Anyway, IWM, what the hell we doing here? We got a 265. Freaking IWM, man. It dropped down to freaking 250. Do you believe it? So I was hoping it would be up in green for the day, but it was not. So I had to roll this strike down to 261. My synthetic cost basis is 260. So it's getting rather close to the cost basis. How much did I make? I made $89, which is not, what I usually make. So it's, again, it wasn't a great week. I'm hoping next week is a little better. But if it continues to kind of sell off like this, it's going to be rough for a while. But again, $89 for, I'm risking 4,269. That is a 108% annualized yield. It's still good, but it's not like fantastic. Again, I'm not worried about the synthetic. It expires January of next year. Is it worth something? Yes, it is, but who cares? The Qs, again, same thing, same story. The market dropped. You could see it's now under freaking $600 at $599.75. I had a 615 covered call. Obviously, that expired worthless, but of course, I rolled it and then let it expire. But and I had to roll it to 615 because I don't want to sell it under my cost basis. My synthetic cost basis is at 615. How much did I make though? I made a lot. I made a lot more than I thought. In fact, I'm still like double checking, triple checking. I'm like, how the hell did I make 358 for, you look at last week, essentially, it was at around the same price. In fact, it was lower. And I used that same strike. And again, obviously, volatility matters. The higher IV, obviously, bringing them. But that's a lot. That's a much bigger jump than last week. I'm not going to complain. Obviously, I'll take it. So I made 358 on the Qs. Again, I don't like where the Qs are at, but it's been very good to me. All right, let me hide that old one. What else we got here? And by the way, I haven't really talked about it, but I do calculate a weekly goal. This is how much I need to make per week in order to pay for my original investment. Obviously, I made more than $19 this week. I made, where is it, 358. If I calculate that, again, I'm risking $8,600. That's how much I'm at risk for this position. So, if you calculate making 358 per week based on 8,600, that comes to an annualized sucker 216%. So that, again, this position has been domination. There's good weeks, there's bad weeks, but the bad weeks are still good weeks. Like this was a bad week and I made 358. Like how the hell? Like what in the tarnation? So again, that is why going forward, when I talk about this RODY type play, it's just going to be mostly indexes. It's going to be on the Qs. It's going to be on IWM, and that's it. Why complicate it? Why take the risk and get involved with these other suckers like Hood, Palantir, these losers, right? No time for it. I mean, when I'm retired, sure, maybe I'll be a stock picker. But right now, no, I am not a stock picker. And if I am the worst stock picker at that. All right, anyway, QQQ synthetic, how's it doing? It's doing all right. Again, but I'm not selling it. This thing expires actually this year, but in December. So hopefully by then, we'll be good. All right, so here we go. Netflix, we had the Zicket. This is like the zebra play. I screwed this one up. I'm not going to lie. I could not roll my covered call. Again, back to the individuals. I had an 85. I was in the money. I couldn't roll it for a credit. So I had to make a decision. What am I going to do? Am I going to close it out? Am I going to roll up my synthetic? My leaps? What am I going to do? I closed this out. And then I was in the process of rolling both leaps. But again, you can't roll leaps if there is a covered call, at least not on Schwab or Think or Swim. It doesn't let you. So if you have a covered call, you can't roll your leaps because I guess it does first a buy to close, and then it does the sell to open. So obviously you have to close out your covered calls that are attached to your leaps, which is annoying. And so I closed the one, and then I had to close this one. And then I'm at the point, I'm like, you know what? I'm just going to close this whole damn thing. I don't even want to trade this anymore. Again, it's a single ticker. I want to get out of my life. And I did. I ran the numbers at the end. It wasn't, I thought it would be better, but in the end, actually, if I go to the, where is it? The closed holdings, right? I only made 337 net. Again, this is, expenses and realized gains, 337 on the synthetic, but covered calls. Again, I took that hit. And I lost 1104. So actually, this Netflix position ended up being a loss of 767. So just add that to the mess here, and then hopefully, this is the last of it. So long story short, if I stayed in my Netflix position, if I rolled everything up, yeah, it would have probably been profitable. But again, anything can happen. Netflix can go back down, but the benefit to me is one less ticker. I got a little out of control in the beginning. I kept adding tickers. Plus, the only reason I tried this, I wanted to try the Zebra, right, or the Zicket, and I see how it works. I do like it. Am I going to use it again? Maybe. I might use it on an index, right? I don't know. We'll have to see. All right, so that's that. Let me hide these tabs. Guess what? I'm very happy to hide more tabs. Okay. Now, all right, hoppers. Yeah, we got some leaps here. They're a bunch of losers, so we don't have to talk about them. But we're going to talk about the VIX. All right. So let me explain my VIX position real quick, and then we'll go from there. So here's the story. The VIX was down, which means when the VIX is down, the market is not fearful. The market feels safe, right? In fact, where's the definitions? Do I have it? I don't know, but I have like definitions based on the prices, right? And when it's under a certain amount, like 15 or whatever, the market is not fearful. The market feels safe. So I decided to buy a leap for $14 with an expiration date of the furthest one that they had, and they don't go out far. It only went out 257 days. I couldn't even go out a year. And the idea was if the VIX goes up high, then I'm going to sell it, and that's my hedge essentially, right? It's the hedge on the market. But during this time, I actually said, can I sell calls on the VIX? Yeah, I can. So I've been selling calls, and the VIX is now, it's sort of still a hedge, but it's also an income play. And I've been selling calls at 25, 24, 25. So I had a $25 call for this week. And I rolled it. I rolled it to next week, obviously. And what did I collect? $81. So obviously that is some sweet ass premium. What's the problem though? The VIX is actually up. The VIX jumped up last week. And we'll get to that in the tracker, but it jumped up basically freaking $10 from last week. So obviously the market is fearful. The market is fearful. The beauty of the VIX, though, I cannot get assigned early, so my $25 is fine. This expires on 3/11, which is Wednesday, right? I believe Wednesday morning it expires. So we'll see Monday, Tuesday, maybe the market will chill out because the market was not chill this week. But again, $81. I made 81, and guess what? The leap cost me 800. So if you calculate those two numbers, again, that's a 10% return for 1 week. That's an annualized of 526%. To pay back my original investment, I'd have to make $19.15 per week. Obviously, I'm making more than that every single week. So, it's working out. It's the VIX play, to be honest, is my best. It's got to be my best overall play. All right, so let's look at what happened week over week. So basically, again, we went from 1986, the last Friday, to this Friday, $29. We jumped up 48% in price. the volatility was 117 last week. It's now 138%. So the option, the price of the leap went from 857 to now 937. But again, now we have a covered call against it. This is the first time we're actually capped on our VIX play, which is okay, because I think the market will chill out. If it doesn't, all right, so be it. We'll have to close the two plays, but and guess what? It's going to be okay. You know why it's going to be okay? This is why. We paid what? $8 per share at the $14 range. What's the break even then, right? $22. We sold a call at 25. So 25 minus 20, $22. That's $300 capital gains on top of, whatever options premium we made, if that makes sense. All right. Again, maybe I need to do a separate video on the VIX play, but I'm loving it. I'm loving it. All right. Anyway, so what the hell am I looking at? Break even. Yeah. But I mean, long story short, I'm not going to, harp on the VIX anymore, but it's just a fantastic play. So for this week, I made $630 capital use, much less, again, because we dropped off, you saw we dropped off Palantir, we dropped off Hood, we dropped off Netflix. We took a big beating on the way down, but we have much less at risk. We have $28,000 at risk. That's a 2.24% return. And if you annualize that, sucker, 160%. Not bad. But again, what's our goal? 510 per week. We lowered our goal because I'm at the point where, all right, my balance kind of took a hit. I'm not going to lie. It did. I have bills coming out of this freaking every single month, around $2,000 in bills, mortgage, this, that, and the other thing. So I need to at least make $2,000 for the month. So that's why for now, I have lowered my goal. I need to try to make at least that. All right. I don't want to make it any higher if I don't need to, because I don't want to make any stupid plays. But for now, again, new month of March, 510 was the weekly goal. We made 630. Box check off. Done. All right. Monthly income, nothing to talk about there. Obviously, I share this file as we go. But now we can go to the active holdings tab. Did I update? No, the VIX should update automatically, right? Yeah. Okay. All right. So let's zoom out. Let me go to some comments, see if you guys got anything. If you get a bigger balance, will you still trade as aggressively? I mean, I'm not, I don't even consider, I'm getting away from aggressive. To me, the aggressive part is doing too many tickers, too many individual tickers. But no, I'm going to work on sticking with the indexes. Buy the new leap first, then close the old one. Well, I want to roll the leap, right? So I close the old, but I guess I could buy another leap, right? And then close. I don't know. It's just, it's annoying. And I should not have waited to the Friday. I would have been a little smarter if I did it during the week. I didn't even think about it. But yeah, those type of plays I need to do midweek, because on Friday I'm doing all my trades Friday, and I'm like, I don't have time for this. I'm just going to close it out, and I did. Again, probably a stupid move overall, but is what it is. All right, so now this is the active holdings. This is again like my balance sheet where we currently stand. So the ones that are going bye-bye soon, when they expire, open, the old open, ELF, and then the old SOFI, right? I'm sorry, the only open, the old SOFI, and then ELF. And then that'll leave us with SOFI, the IWM, and the Qs and the VIX. But we're going to see these through for now. Again, I may close them, may decide to change my mind. But for now, you could see how much do we need on these various, plays to make house money. House money meaning, did I pay off my original investment? On SOFI, I did, which is fine. However, right, there is still money at risk, because remember the credit put spread? We're selling a put, we're buying a put. That spread, that's still at risk. So, and yes, it is damaging right now because SoFi is down so much. So I still have not made enough to offset that. So right now, this SoFi is actually a losing play. I'm actually down 43% overall. So open, I'm down 46, but I have time. I have till November. SoFi, which I only have till May, April, May, 2 months away, I'm down 43%. So I'm going to have to close this at some point and probably take the loss. This SoFi, it expires in 28. This thing I'm not worried about at all. In fact, I think it'll be just fine. ELF, I'm down 18%. But again, ELF had a massive sell-off. ELF dropped like ridiculous this week. What was the drop this week? It dropped 10% this week. Like, I don't even know why. Probably the stupid news, the war, whatever. I don't know. But I think it'll come back up. I think in the end, I'm probably either going to break even or have a little profit on ELF. But I'm not too worried either way. ELF was a good journey. I learned a lot. And that's what it's all about, too. I don't care if I lose money on a trade. I just care if I actually learned something. Why? The question is why. Why did I lose money on this? Why did I lose money on that? And now if I can easily explain that and learn from it, that's the point. That's the point. So obviously I don't want to lose money, but if it's at the expense of learning, that's fine. All right. Anyway, let's look at IWM. IWM actually shows I'm down. I'm down 1.93%. So oddly enough, that's how much of a hit it took on the synthetic. But again, I'm not worried about this at all because this, it'll be fine. The Qs, I'm up 57%. Obviously, the Qs, like I said, domination. That position, that trade, I'm gonna always be in the Qs. I'm gonna always be in IWM. Again, I'm not in the SPY because it's more expensive and it's less volatile. Like the IV's less, so it's less income for me. So I'd rather be in these two. I'm in SPY through, again, an ETF called T-SPY. And then last but not least, we have the VIX. How's the VIX doing? Again, I paid 800. I made 272 in covered calls so far. Obviously, that leaves 528 left. But overall, based on, oh, wait, do I show, where's this synthetic value pulling from? Tracker G7 plus H7. VIX tracker G7 plus H7. I gotta freeze panes here. All right, so yeah, no, I gotta do. Yeah, I have to update that. What a pain in the ass. So it's on row 9 now. Yeah, obviously based on that, yeah, I'm up a lot more. But again, knowing that my covered call is in the money, ideally, yeah, it's not technically worth just all that, but it is worth a decent amount. So yeah, overall, based on, the active ones were up 4.76%. All things considered. What is this? Capital saved? Yeah, I don't know. I don't have that for the VIX, but either way, I'm showing an 11.98% annualized overall based on it, which obviously is not on target. But my target, what does it show? 50%. My target should be like 40 now. We dropped it. But either way, much more to learn and much more to talk about. Couple notables I have to worry about is ex-dividend date for IWM. That's approaching this month, March 18th. I completely forgot about it until I looked at this. And then the Qs, same thing this month on March 23rd. When I sell covered calls across this ex-dividend date, I want to make sure I'm not going to be in the money because if not, they'll take early assignment. They'll take my shares and they'll say, here you go. That's mine, brah. And that's how it will go. So that's the update on the RODY fund. Like I said, what works, what doesn't. The Qs work, IWM works, the VIX works, individual tickers, again, you gotta time it right. It will work, but it's just the market right now is just it's not nice. Little bonus content. I'm trying to back to the whole tax thing. I am trying to build a base of where to store my cash, right? That's in my account. So STRC, I've been slowly building that out. At least, on this account, I have about 100 shares, which it's not a lot, but it's enough to, it's enough of a commitment for me based on my current balance. And then the recent one I added is T-SPY. So what is the benefit of these two positions? Why are they now okay enough to be as part of my base, right? Because again, I was moving to a money market fund that Schwab offered, which was paying about 4%, but I decided to get out of that and just go with, investments that are going to pay me double digits, and investments that'll stay capital flat. And STRC, again, they stay at 100. That's the NAV. That's their par. Of course, yes, we've seen it move down to 90. We've seen it move up to like 105 maybe. But in the end, the goal is $100. So I'm happy with that. I will buy more STRC as it goes down in price. If it goes down in price, I should say. If it goes to like 95, yes, I'm going to freaking buy a lot of them. If it goes down to 98, probably I'll buy some. Usually I do like 10 a pop or so. But anyway, their margin maintenance is 50%. Their yield is 11.5%. And how's the tax on this one? Well, it's 100% ROC, which means, guess what? It's deferred. It's deferred. So if they pay me at about 11.5%, I don't have to worry about it for 9 years, right? Because then by then, sure, they'll pay me back. My taxable cost basis would be zero. But even after that, if they're still paying the ROC, it's supposedly taxed as capital gains, which is a better tax rate than ordinary income. So to me, STRC as a base is a no freaking brainer. No freaking brainer. Of course, you have to be okay with strategy. You have to be okay with Michael Saylor. You have to be okay with Bitcoin in general as a long-term investment, which I am. So STRC, I'm good. And I'm going to buy more and more and more and more and more. And then T-SPY, again, this is a newer investment. They have a margin maintenance of 30%, obviously pretty damn good. Very good performance for them. They have been staying essentially, flat. At least I did a comparison against, some other funds. But you can see, like, obviously, they... what a drop there. Oof. But obviously I think they launched at 25. They're at 24. So they're down now. They've been up for a while, but they essentially, like I said, are capital flat based on their strategy. The 14% yield on their current strategy kind of works. So I was looking for a fund that would pay me a distribution and stay capital flat. I wanted those two things. So I think T-SPY is the max. If I go any higher, like, it's hard to really get a higher yield on. Oh yeah, and by the way, the other qualifying factor was it has to be on the S&P, because I already have exposure to the Russell and the NASDAQ. So based on the S&P, the happy medium was T-SPY. And the other beauty of T-SPY is I've been talking about and wanting to do zero DTE trades. I finally made the decision. I'm not doing it right now. I just don't have the time commitment for it, because I work, and it's just not my. It's not. I can't. That's the thing. Some jobs are easier, for trading. No, not mine, and it's not going to get any better. So I'm just not even going to go down the road of zero DTEs. It's not a good time to learn it. So I'm going to pay someone to do it for me. So I'm going to pay T-SPY to do that for me. And again, what do they do? Well, they own the SPY, and they do zero DTEs on SPX. SPX is qualified for 1256 contracts. So the beauty of this is great. Tax benefit, yes, 60% taxed as capital gains, 40% taxed as ordinary income. So 14% yield, flat capital, great. So between these two, yeah, that's an average yield of 12.8%. that is not enough to pay my bills based on my current balance. So this base alone is not like I can't just put all my money in these two and then let it run an autopilot. I wish I could. I can't. Well, I don't really wish I could because I do like trading options. But the point is, the bills are greater than the income that these two would generate. So I have to still make more on the option side of the house in order to cover the 2,000 coming out each month for the bills. But for now, I'm building a little, I don't know, safety net, what we want to call it, just something that it's making money, right? Again, and I can use margin for these if I need to, right? The margin rate is less than what these yield. So I'm comfortable just continuing to add and add and add. Will I add other base? Maybe. If you guys are here live right now, what would you use as a base, or what do you use as a base right now? Like if you have cash in your account and it's just sitting there, what would you choose to say, okay, I feel pretty secure about this, this stock or this ETF, this will stay flat, this will move up, and it pays, a decent yield. What would be your choice? Pick your poison, right? Wolf says, I did finally write a put on TQQQ yesterday after BBAI shot up, and I could get out of my puts at a profit. Yeah, I heard BBAI is taking a whooping lately. But yeah, it did have a good jump. But TQQQ is a great, fun ETF for sure. Just a note, Sigitara has 1 million of his own money invested in T-SPY, according to video Marcus Miller did on managers who own their ETFs. I mean, to be honest, I really don't care who owns what, as part of their ETF, because what they own, it means nothing to me. I don't really give a crap what anyone owns. Obviously, it shows their commitment to the fund. So, you can appreciate it from that angle. But at the same time, it really doesn't matter to me. I know I saw the video and and then I saw some back and forth on X about it. It's just, I don't know. I don't get it, but whatever. People, some people do care. Actually, a lot of people do care because people care even if I own, like if I talk about, YieldMax. Oh, how dare you talk about YieldMax? You don't own every YieldMax fund. What are you doing? Things like that. Like, who gives a crap what I own? I write options for fun on my portfolios, my Social Security, disability, pays all my bills. That's good. That's good, Wolf. But you still want to make money, of course, right? So, all right, Double D's. At least someone answered my question. So Double D says GDXW, GOOW, and KSLV are my bases. Okay. Okay, it's KSLV. That's the silver that pays income, I think. But again, silver, man, I don't know. It just run up so much. It's scary. I like the Neos family too. SPY-I. Yes, SPY-I is 1256 contracts. Believe me, T-SPY and SPY-I, they were close in comparison. But, T-SPY won for several reasons. And the main thing is I wanted to do zero DTEs. They're doing the zero DTEs for me. Now I'm doing it. And I'm actually tracking it. I don't know if you guys saw. I don't know how far I'm going to go with that, but at least I'm going to track it until I get a comfortability of, how exactly the fund works. Because obviously I don't want to invest in a fund where I don't even know what the hell they're doing. I am adding index ETFs because they are more stable. Yeah, of course. Yeah, it depends if they're double or triple leverage too, though. But yeah, overall, the idea behind it would be a little more stable. So yeah, that's kind of the update. I know you guys didn't ask for my base, but it's something I'm working on. Again, I'm working on a lot of things this year. One is, smarter with taxes, smarter, with that whole thing. Two is, building out, getting back to investment. I want to do, again, mostly options trades, but as far as like the income just sitting there, find secure, steady options. Should I add? Technically, yes, I could probably add just an insanely high yielder like Ulti to balance this out. I'm actually a big fan of Ulti and their new strategy, to be honest, and I am very tempted, but I don't know. Right now, I'm not rushing anything. These two are the choices, and I'm comfortable with them. As far as real quick, before we end it, earnings for next week, we have Hewlett-Packard on the Monday, March 9th. Who else? No one really. Oracle on the Tuesday, and really no one. Wednesday, no one worth a damn. Thursday, Adobe, okay. Dollar General on the Thursday, Ulta. And then Friday, wow, pretty lame earnings week next week. Yeah, so that's the update. I played my songs at the beginning of the video. Should I play them again and let you guys, pick which one you like in the keyword? I know it's going to be annoying, but maybe I'll play both. But before that, as always, this is not financial advice. I am not a financial advisor, and this video was for fun and entertainment. So hopefully you had fun. Hopefully you're entertained. If not, come back next week. But yeah, I'm going to play two songs. I'm going to play, I'll play Bang for the Buck first again, which will be the first song. And then the second one will be RODY for the People. So let me know if you like song number 1, which is the first song that's going to play, Bang for the Buck, or song number 2, which is RODY for the People. Let me know in the comments down below, and that'll be that'll represent your keyword. I'll chat in the comments until the songs are done, but then we shall end it. All right, let's go.
Meet RODY, more bang for the buck. Wall Street suits, your time is up. Meet RODY, more bang for the buck. Meet RODY, more bang for the buck. Wall Street suits, your time is up. Stack that premium, protect my 6 upside open, but I hedge that risk. Garage born plan, average Joe taking a stand. RODY's the method, RD is the man, RD is the man. Yeah, didn't wait on permission. I picked up the weight, phone in my hand, early hours, learning to take a rise toward patience. No room for excuses. Every choice mattered cause the outcome it uses. I stopped handing the wheel, the voices I trusted, took responsibility. That's when it functioned. If it worked, that was earned. If it failed, that was mine. Family in my vision, so I stayed on the grind. This wasn't about hustle or flexing the grind. It was structure and rules I could run every time. RODY came from effort with discipline attached, built for the people who carry the weight. Caddy the weight, so meet RODY. More bang for the buck. Wall Street suits, your time is up. Stack that premium, protect my 6 upside open, but I hedge that risk. Garage born plan, average Joe taking a stand. All D is the method. All D is the man. All D is the man. I don't chase green candles, I monetize waiting. Data working daily while they guessing and praying. Premium stacking, structure over sensation. Volatility paying rent with no conversation. Wrist boxed and tight before the play even starts. Calm under pressure, John Wick with the plan. They argue direction, I structure the trade. Let volatility work while emotion gets played. Fast money flashy, but it fades when it's pressed. I want repeatable wins with my downside dress. Not a lottery ticket, this a blueprint I trust. Level the field, get more bang for the buck. Meet RODY, more bang for the buck. Wall Street suits, if your time is up. Stack that premium, protect my 6 upside open, but I hedge that risk. Eyes born playing, average Joe taking a stand. RODY's the method, RD's the man, RD's the man, is the man. Family to your head. I don't need hype, I don't need a crowd. Just rules I respect when the pressure gets loud. This ain't for everyone, that's part of the design. RODY rewards the ones who take responsibility every time. RODY, RODY the method. RODY, the people, the people, RODY, RODY. If you want it, carry the weight. Meet RODY, more bang for the buck. Wall Street suit.
All right, that was bang for the buck. Here comes RODY for the people.
Yeah. Oh, yeah. Woo! Yeah.
Early mornings before the sunlight, house still sleeping. Screens already lit, one desk, one plan. Every click gotta mean something. Born in the garage, one outlet, one extension. Pressure taught discipline, not talking, just intention. No suit fed my confidence, no hand-me-down plays. Bills on the counter taught me risk has a face. They said trust the system, I trusted the work. Every loss paid tuition, every win left a scar. I heard a cricket in the quiet, steady chirp in the dark. Like patience beats panic when you're playing it smart. If I eat, that's on me. If I fall, same name from the people for the people. No shame in the gang. This ain't Wall Street.
This RODY, hey.
Bang for the buck, move slow, move low. Stack that premium, protect my six. Upside open, but I hedge that risk. This ain't luck, I'm ready. Garage born mine with the market steady. Yeah, I don't chase green candles, I monetize waiting. Data working daily while they guessing and praying. Risk defined entry, exit already mapped. Know what I lose before the order gets tapped. Premium stacking, structure over sensation. Volatility, paying rent with no conversation. I don't need direction, I trade behavior. Let emotion burn out, let the numbers stay paper. Fast money, flashy, but it fades when it's pressed. I want repeatable wins with my downside dress. Not a lottery ticket, this a blueprint I trust. Level the field, get more bang for the buck. This ain't Wall Street, this RODY. Bang for the buck, move slow, move low key. Stack that premium, protect my six. Upside open, but I hedge that risk. This ain't luck, I'm ready. Garage born mine with the market steady. Raj, cricket, patience building the minutes. Risk known, I don't trade what I don't own. Not for everyone, let's keep it exact. Pressure make diamonds, not internet caps. No handouts, no hero, no suit to impress. Just structure, discipline, time doing reps. RODY the method, remember the name. From the people, for the people, but not everyone plays. Born in a garage, born in a garage, yeah, born in the garage, inspired by cricket. Built for the people, but not everyone gets it. Born in a garage. Yeah.
All right, that was RODY for the people. And so make your vote. Bang for the buck was the first song. The second song was RODY for the people. Let me know in the comments down below. And why not have an encore with the OG song, R to the O to the D. I'm playing this, and then I'm going to end the video. So thank you all for being here. Thank you all for watching, and we will talk tomorrow. But here's the encore song, the real song.
Ooh. Yeah. Good morning, friends. R to the O to the D. Retire on dividends, you know me. Cash flow mindset moving differently. Numbers don't lie, plans stay ready. If you want that life, say freedom with me. R to the O to the D. Retire on dividends, you know me. Built, not sold, yeah, intentionally. No hype talk, just clarity. If you want that life, say freedom with me. Mid-40s, married man, house stay loud. Raising up boys, turning boys into men. New puppy running, chaos around. Still clocking in, but he plotting the end. Giants fan scars, yeah, he wear that pain. Smiles through the losses like part of the game. Never throw shots, never talks that mess. Builds people up, less results address. Streams every day, never missing a beat. YouTube live X when the mic get heat. Not selling dreams, just showing the math. Wins and drawdowns, full on his path. Spreadsheet brain with a streetwise frame. Plays of discipline, never chasing fame. R to the O to the D. Retire on dividends, you know me. Cash flow mindset moving differently. Numbers don't lie, plans stay ready. If you want that life, say freedom with me. Yeah. Options on screen, risk handle precise. Structures built calm, every move got a price. Cover calls roll, protection in place. Time on his side, patience setting the pace. They say slow down, he say stay exact. Same calm tone when the market snap. Runs through mud just to test that will. Same mindset when the chart goes still. Sings on the post, crowd laugh, he grin. Go dig a hook, but the lesson still win. Movie quotes fly, wrestling frame. Serious work, but he keep it light, man.
R to the O to the D. Retire on dividends, you know me. Cash flow mindset, moving differently. Numbers don't lie, plans stay ready. If you want that life, say freedom with me. This was for fun and entertainment purposes. I hope you have fun and were entertained. And if not, I'll do better next time. And if you made it this far, and you want to make sure everybody knows, you got to say the keyword. Freedom!